Today we're going to go over how I made $850 just in a few minutes. Now the lesson today is going to be called How to Be in the Right Mindset, because the right mindset is key to being successful in the market. See, you're not going to be able to emulate this exact trade because every day is different in the markets. So we're going to go over this one trade and the mindset I had and how you can prepare to have the right mindset so that you can be profitable in the market. Let me take you back to Monday on YTEN, and this stock ran nearly right at the open of the day, and we can see this thing just go from about $2.31 all the way to $8.67. See, that's what I love about the penny stock market. Stocks can rip hundreds of percent within a couple hours. Now, if you were to trade some blue chip companies such as Apple, their market cap is so high and their public float is so high that there's not a lot of volatility, although they do have liquidity, but the stocks only move around 1% a day. And so there's not a lot of room and volatility to make a profit to grow your account quickly, whereas on a YTEN, this stock on Monday went from 230 all the way upwards of $8.67. So on Monday when I saw this, I started studying it. I actually did not get in on this trade. So how do I prepare for the next one this week? And that's what you do on Mondays a lot of times, just because you want to understand the sentiment for the week. And so this stock on Monday, I said, okay, I'm going to study it and figure out how I can play the next one, how I can trade the next one tomorrow. And now some people, if they see YTN jumping up like this, they're going to experience something called FOMO, and that stands for the fear of missing out. And that's when you're going to get your account blown up. That's why 90% of people lose in the market, because they chase and they end up blowing their accounts, not knowing how to cut losses quickly. So on YTEN, I actually saw this stock going up on the scanners around $3, and I did not trade it. You're asking why didn't I trade it? Because there was still a lot of opportunity to make money on it. Well, it's because last week wasn't the same as this week. See, the stock at $3 is already up nearly 50% on the day. Which you think about it, that's pretty wild. See, every day there's stocks going up 30 to 50%. There's opportunities to make money. But going this supernova, that's not something I was anticipating on this stock. And so being a disciplined trader tells me, okay, just study this stock and prepare for the next one. Don't chase it. Because I'm not anticipating this move, I'm kind of gambling at that point. And there's a difference between gambling and predictability. It's a pet peeve of mine, honestly, when people talk about stock trading and day trading as gambling or as a crapshoot, etc. It can be. The reason it's not gambling is because it's not a random system. Day trading is people actually placing buy orders and sell orders. And you're dealing with people, and people are not unpredictable. People are actually very predictable, and that's how you can make a lot of money in the stock market, just understanding people. And I'll tell you why I'm disciplined. I've learned a lot, and I've got burned from chasing stocks. Getting burned from chasing stocks is not fun, so you do not want to chase. It's almost like you got to do the opposite of what your human nature tells you to do. Your human nature tells you to buy when a stock goes up and sell when a stock goes down, but that's not what you got to do. See, in my trading now, I often buy when a stock's going down and sell into buying momentum coming in. Buy at support, sell into resistance, or I like to scale out into resistance and then let the rest of my shares run out. Warren Buffett said the stock market is a device for transferring money from the impatient to the patient. That's incredibly true. You got to be patient in this market. If you start chasing and experience FOMO, you're not going to do well. If you're learning anything from me, please learn that you got to put time, effort, and energy into studying this market before you ever start trading. The pet peeve of mine is really when people just fund their accounts or don't think they can trade until they have a lot of money in their accounts. And then they just blow it up and then say the stock market's a crapshoot. Could you really expect to just one day wake up and grab a basketball and go play NBA with all the professional athletes? It's not going to happen. So It's the same for day trading. There's professional day traders, and you're competing against them. You can't just wake up, fund your account, and expect to be good to go. Trading takes practice. Practice, 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 okay? That's the key to your success in this market. Waking up, practicing, studying every day. There's no secret formula to it. It's just doing the same thing every day. I've been waking up for the last couple of years doing the same thing every day, and I understand how people trade, where they're buying and where they're selling. So let's get back to YTN and TIK. TIK is the stock I made $850 on just from studying YTN the day before. So YTN, there was 3 things I had noticed about that stock that I wanted to prepare for the next day. One being, the stock had almost no pre-market volume. If you look in the darker gray area on the chart, that's the pre-market from 7:30 to 9:30, and there was hardly any buyers and sellers at all. The second thing I noticed was that this stock was a very low float. A low public float means there's not a lot of shares available to the public. When people are buying the stock, it's going to rip a lot quicker because there's a lot more demand. YTN and TIK had less than a couple million shares apiece. Okay, so the stock YTN had low pre-market volume and it had a low float. Now the next thing I noticed was it had a catalyst. So it had news the day of. Now the news isn't as important as you might think it is. Some people rely heavily on fundamentals of companies. And as a day trader, it's quite the opposite. You heavily rely on technical indicators versus fundamentals. It's always really important to pull up a daily chart and look at the chart's past history, because the past chart's history is pretty indicative of the future. It's not 100%, but you can see its personality. So does it spike? Does it spike big? Does it give its gains back? Another thing I noticed with YTN was that it just popped up on the Hive-Day momentum scanner and then everybody flooded into it. It wasn't on many people's watch list. It wasn't on the gap up scanner the day of because it had no pre-market volume. So it really wasn't on anybody's radar. So it just popped up on the Hive-Day momentum scanner when the market opened and then just started getting an influx of buyers. Every stock needs volume. So that's an obvious fourth. You always need volume to move. So I'm not going to just buy and hope, because that's gambling. If I want to say stock trading is gambling, that would be gambling. Just find a stock and trading it. See, volume provides predictability. When a stock is low on volume, it can move left or right off of a few orders going through. But when you have lots of orders going through, that provides the predictability and the patterns. Within a minute, TIK popped up on the Hive-Day momentum scanner. Now I was able to get in before $3 because I noticed very quickly this stock had a catalyst, it had low pre-market volume, and it was a low float with good volume. So I got in before $3, anticipating the whole dollar break. It broke $3, kept running. I scaled out half my shares, and I scaled out the rest up near $6. I only had 600 shares. I made $850. So each penny it moved, I was only making $6. So I made over $1 a share on this stock, just being prepared with the right mindset the day of. So that's my lesson to you guys. There's always going to be a next one. So you do not have to feel like you got to chase. There's always going to be a next one. So see what's happening and prepare mentally. Okay, why did this stock do what it did? People bought because it had a low float. People bought because there was low pre-market volume. These are things that you have to have an eye for. And always, always, always look at the daily chart so you can understand each stock's personality.